Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 23rd of November here in 2021. And this is not your average holiday week. It is a holiday Thursday. It's Thanksgiving in the U.S., but normally we have what we consider low volume, low volatility, dare I say, bullish holiday creep. But that is not what's happening at all in 2021. We keep the volatility up despite the market being unchanged. Looking at today's session, the S&P was mainly flat on the session, and we'll take a look at that in a minute. The Dow was up 0.5%. The Russell was down, but the NASDAQ, which is a tech-centric index, also the XLK, which is going to be our technology ETF, and the Y, which is consumer discretionary, that had the weakness, and we're seeing that play well beyond. So this is the NASDAQ with the volatility, and this is a pullback from 16.8. There goes the levels all the way back to that 20-day moving average. That's 16100 for the NASDAQ futures. And that pullback is natural. That's what we'd expect in a market that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row to the upside is a typical little pullback. 1, 2, 3, 4, 5, 6, 7. Typical little pullback. I like to call those rubber band snapbacks or just retracements in the market. So that's the NASDAQ. That's where the concentration of the selling has taken place. And to a general extent, we'll take a look at our S&P 100 names. Where was the weakness? Tesla. Tesla, being a big market cap name, fell from the 1,200 per share level, or 1,200 per share level again, back again to its 20 moving average. Outside of that, selling continues to the downside in Disney, which has broken support, broke the range at the 170, and now trades into the 150. But also, we had Oracle, typical pullback Intel, and the selling pressure in some of the monsters of tech. We saw Tesla a moment ago, but there's Facebook. Netflix, not really a monster of tech, but still used to be a FANG stock. Netflix was a FANG. Facebook, Apple, Amazon, Netflix, and Google. We dropped the Netflix, but nonetheless, NVIDIA is another such example. And of course, Microsoft, there's where the selling was concentrated. Where were the bullish activity? The bullish activity today's session, here Tuesday, was in the financials. Why? What stocks led the market up today? They again were names such as AIG, American International. We also had Bank of America, looking on the daily chart over here, and the intraday chart on the right. ConocoPhillips and ExxonMobil are energy stocks. We'll come to that in a moment. But right now we're talking about financials. Goldman Sachs, Morgan Stanley, to an extent MasterCard, JP Morgan, and we'll look at Wells Fargo and some others, Capital One, Booking, etc. So that's the play there. But energy was up, crude was up. That's oil. That's USO if an ETF, but it's also the XLE. So we had a split market. Keep in mind, the last two sessions, just for quick reference, the XLE was up 2 days in a row. The XLF was up 2 days in a row coming off the lows. But at the same time, that NASDAQ pulled back. So we still have the dominance of the monsters of tech. This week feels like opposite week. Feels like everything is in reverse. It is not low volume. It is not low volatility. And it is not, in any sense of the word, boring. And the other way that it's opposite, most of last week's sessions and even last week's video, we touched on the topic of tech leadership driving everything to the upside. Everything that is in the NASDAQ. All of these, if we picture from last week, were red. Energy was weak. Financials were weak. And generally across the board, our sector performance was weak. But the technology sector was strong. So we had lots and lots of red over here. But the things that mattered for the NASDAQ were up. This is opposite week. Everything over here is green and everything over here is red. That is the play into the market this week. But outside of that, we have the bond market, and I'll actually trade TLT. You can also take a look at ZN and ZB. This is the 10-year Treasury note, U.S. Treasury debt, and the 30-year Treasury bond. Both are pushing lows. Simultaneously, that means that the yield is going up. So this, I think, tells the story, which is that the yield, this is TNX, 10-year yield, 3 days in a row up. That is going to boost the financials 3 days in a row to the upside. And of course, to an extent, a little bit disconnected, but still energy 3 days to the up. But XLK, 2 days down, and the NASDAQ 2 days down. So that's the tale, once again, of two markets. In this corner, we have the tech stocks, which were weak the last two sessions, but strong the last week. And in this corner, we have, dare I say, everything else, but mainly financials, which were weak, very weak last week, and very strong this week. So it remains a tale of two markets, two extremes. Tech on this hand, financials on this hand, and everything else is left to fight in the middle. That includes the S&P, which is made up of multiple sectors and multiple stocks, not so much the NASDAQ. The NASDAQ is the monsters of tech. The monsters of tech are the NASDAQ. Russell is a lot broader based, and of course the Dow is just 30 stocks and their price weight for their movement. That's the big picture. Now, the bond market is pushing its lows in a trading range. Crude is coming up off that 75 per barrel level. We had some sell pressure in gold. So just the opposite. Last week saw bullish activity and really some bullish plays just shy of the 1880. 1900 was a good spot, but that was enough for the bears to come in. And gold remains in a sideways trading range. It's neither trending up, it's neither trending down. The key focal points are just shy of 1900 and just above 17, really 1725, even as far as the 50 print for the gold market. And if you're trading the ETF GLD, I do have some little longer term downtrends, but I'll get rid of those and we will no longer reference the downtrend because the new opportunities are to play within the range. For GLD on the ETF, that's about 161, 180 at the top, and about 175 for the ETF. Quick note, because we have a shortened trading week, and again, this is not your typical week, but stocks that made new all-time highs, or at least 52-week highs, include some of the familiar names: Procter & Gamble, Costco, Union Pacific. We also can take a look at Dollar Tree and some of the others. This is in the S&P 500. And a quick glance at a few of them. Here is Procter & Gamble. The hourly chart is here. The daily chart is there. Costco continues the march to the upside without even remotely pulling back. No retracement in sight. And there's no trade in sight, not for me at least. Way too overbought to buy. High risk of a pullback. And shorts or fades or put options are not really working in a stock like this that's going parabolic. And it's getting additional bullish volume. So we want to stay away from something like this, or at least I would. I'd rather trade in stocks that are a little more range bound and not parabolic or strongly to the upside. One can get hurt pretty badly in so doing. Tesla is another example of something like that. Repeated up and sudden pullback. This is a risky stock that provides opportunity, yes, but there's a lot of other things that are being a little more calm. Mainly, most of the stocks in the S&P 500 are not doing parabolic type moves. Home Depot is one that we saw not long ago and is currently doing that parabolic up. So these are high risk stocks to be in the put side, but I think they're identical high risk to be in the long call side, because any moment that rug could be pulled, the price could be much lower, and a lot of traders will be hitting that exit button at once, and therein lies the risk to being blindly long. But there's other stocks that are not being parabolic. That is how I like to focus or filter my swing trade candidates. Something looks like this, plenty of other opportunities. Nothing commands us to play into Home Depot. Nothing commands us to play into a stock, maybe even like Microsoft, which is just strongly trending to the upside. If you are to play long or bullishly into something that is so trending, it is best done generally on pullbacks or retracements. and that is quantified as usually pulling back to a daily moving average or some other deviation, standard deviation, Keltner channel, Bollinger Band, whatever, linear regression, whatever you'd quantify as a pullback. That tends to be a little bit safer than what that means for linear regression. If you're ever in the need to quantify, take all those off, and you can do something like this. Linear regression, 50 and 100, double click those, get them into the studies on Thinkorswim. And then we have a little bit of a structure. That is not a buy. And if anything, it's a short sell. And that's how we look at linear regression functions. But what about Costco? That is a little too linear, a little too rough to play into. But again, many other stocks are having better patterns, better consolidations. And of course, we have the holiday among us. That is Thursday. We have a half trading session on Friday. But as the video implies, this is not your average Thanksgiving. Volume, volatility, activity, it's all here. Stick around and trade it. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for November 23rd, 2021.